Hello and welcome to Trade of the Week for the week starting Monday, the 28th of November. Let's look back at a couple of Trade of the Weeks that we've still got open from last week and prior to that. And the first one is a very topical one. We've been talking about the rise of COVID cases in China and the implications for the Chinese economy and sentiment around about the Chinese yuan. Of course, that has come to a head over the course of the weekend as we have seen widespread riots and protests in the country. Whilst we have seen a big gap higher, really benefiting our trade, we have actually seen much of that gap eroded. So hopefully we do continue to see this push higher and we push up through the 72793. But certainly as long as this trade's been open, so we opened it on Monday, we have pretty much been gaining ground. So it's working out very well so far. The gap higher was brilliant, but now we're starting to see it pull back a little bit more. But I think that uncertainty is likely to see this market push higher once again. It's just worth noting we're seeing the US dollar coming under a little bit of pressure at the moment as equity markets, they're a little bit uncertain, but the US dollar doesn't necessarily seem so uncertain, which is weakening. And so it's that sort of two sides of the coin really pushing and pulling it against each other. As it stands, it still is the Chinese yuan that's losing ground, and we're expecting that to continue. Then looking at sterling against the Japanese yen, we have been seeing this playing out very well thus far. We can see here from the inception of the trade back here, we've been largely regaining ground. That's taken us up into the first swing high of 169.08, and the fact that we tagged that is a positive. It means we're no longer creating lower highs, but we're seeing this big bearish engulfing taking shape today. So is this the beginning of the next big leg lower? I think personally, look, we've come into this 76.4 fib. We've rallied to create flatlining highs. So near term, yes, we could see further downside. I don't think it's going to last. Maybe we see a few days. I think we're going to create a higher low here. And this essentially forms a bottom before we push higher once again. So again, happy to keep this trade open and remaining in profit, thankfully, for this one as well. For this week, I'm sticking with the FX markets and I'm looking at the Australian dollar against the euro. Now, bear in mind, we have been hearing comments from the RBA governor, who's essentially coming out relatively confident, saying, well, if you look at what's happening in terms of wage growth, it's in line with expectations for us to come back down towards target in terms of inflation. And he doesn't think that there's going to be a particularly hard landing. He thinks that they're well geared up for a soft landing in the country. That doesn't necessarily make you think they're about to start ramping up their rate of rate hikes, essentially. So we've seen a move down to 25 basis points, and the picture is very different in Europe. Inflation, double digits. They're not necessarily seeing the downside in terms of inflation we're seeing in the US. And therefore, I'm expecting to see the likes of the ECB, the likes of the Bank of England continue to maintain their hawkish rhetoric, whereas we're obviously seeing something very different from the RBA. So looking for a short here. I know we've already seen a sharp decline here, but looking for a short here in Aussie euro, putting my stops above this 65.07. So let's just put it up at 65.20. I'm just going to adjust that here. So 65.20 for the stop. And then I'm just going to try and get a 1-for-1 on this trade, as I've been doing recently, 117. So towards the downside, you're looking at a target of, there we go, of around about 62.86. So looking for shorts in the Australian dollar against the euro with a target of 62.86 and a stop loss at 65.20.